Let's get to some tech earnings now as we turn our attention to Meta and Microsoft, which reported last night. Amazon and Apple after the bell today. Here on set with us, Landsberg Bennett Private Wealth Management CIO Michael Landsberg and New Edge Wealth Portfolio Jay Peters. Welcome to you both. Michael, these earnings have been critical throughout the earnings season, but overarching that even has been this momentum trade, which was horrendous coming into about today, and now has a lot of life to it. So maybe it's positioning related, like we were just talking about, or maybe it's fundamental, but how do you square these two things?
Well, I think a lot of it is the earnings have been good, but I think there's a lot of this talk about what the CapEx is going to be. And I think there's been a pushback of the more you spend, it's not good right now. And I think part of it's because investors are impatient. They want to see a return on their CapEx. It's going to take a little while. And I think what's happened is the companies that haven't pushed the CapEx button that more have actually rallied. I mean, you've seen Apple hold up very well because they don't have a lot of AI.
So you think the market has shifted? Because for the last several quarters, it's always been, we want higher CapEx. We're rewarding the people who are raising that. And then you think this is the quarter in which that flips because Google sold off after they raised theirs. Apple on the sidelines is at all-time highs. Look at Meta today, down 9%.
I don't know if it's too early to tell that. I'm going to look really at what happens with AMD next week and then NVIDIA, because those are ultimately the people that are getting the CapEx money. But I think it's a concern because I think what happens is investors get impatient with how much money can we throw at. And some of these stocks, as we saw with the last story, they've gone up so much that I think people are like, well, I can take some money off the table and not really hurt myself.
Jay, how does Microsoft fit into this? It's up 17% after what it said last night. It's got the cloud. It's talking about people using Copilot. I'm hearing people in the wild talking about how they've used Copilot for projects at work now.
Yeah, so Microsoft has been the hyperscaler that's lagged the rest of the group. They've seen their valuation reset by more than any other, down 40, PE's down 40% from where it was a year ago. And I think what we got from Microsoft was, a very healthy set of results, especially in the cloud segment, and also just a hint of a little bit more capital discipline going forward, which I think the market
be Michael's point. So you saw a hint of capital discipline, which again, is that supposed to be the death knell for the AI infrastructure trades, which they've sold off hard coming into this, but now today they're all levitating again.
They are. I think one of the takeaways is that Microsoft did not say we're reducing CapEx. They reiterated their fiscal year CapEx numbers. They did say they're probably going to fund a little bit more of that from operating income as opposed to debt equity market issuance. I think that, gives investors a little bit more of a, comfort with the spending levels. And I think, if it is a more disciplined CapEx cycle, maybe it's a little bit longer. That gives a little bit of clarity to all the beneficiaries as well. You can kind of model some of their earnings growth.
We have, meanwhile, Michael, equal weight S&P more or less at all-time highs. So normally when we get corrections like this, and whatever the market leadership area has been, you expect a broader sell-off, markets in turmoil. Instead, it's like a party. And maybe it doesn't feel that way if you're Leopold's fund. But if you're in something else, I mean, what was up? Coca-Cola was up 7% after earnings this week.
I think part of it is that there's a difference between we talk about diversification. I think there's to some extent the death of diversification from a sector standpoint. Now it's AI or non-AI diversification. A lot of people have bought AI tech stocks, but everything else they bought, industrials, utilities, have all been AI levered. I think that's why you're seeing the equal weight do well because it's got more of the stuff.
So in other words, even the industrials and those areas that benefit from this halo effect, the market's saying, no, I still want to go elsewhere. I want to be in the staples. I want to be in healthcare.
And a legitimate non-AI is for diversification. If you really want to lower the risk, because we see risk management is a pretty important thing, is having things that are not even the healthcare. Don't buy AI-related healthcare if you want diversification. If you want to have a levered bet like situational awareness, buy everything that's AI. Buy your cereal that's AI.
Yeah.
But when you look for diversification, you need to find something that's going to really give you that.
Hearing from folks in the market today, they say they would take what's happened with situational as an entry point, right? There's been a huge correction from the highs. Now here's a big player that's being forced to the sidelines. Would you think about it the same way in terms of those narrow areas of leadership?
Depends on the names.
Okay.
And when I look at our biggest holding is NVIDIA. We own 2%, 2.5% of NVIDIA. I don't have 8%.
You own 2% of NVIDIA?
Yeah.
Jeez.
No, well, 2% is a portfolio, not 2% the whole thing.
I was going to say, I'm like, wow, thanks for making the time.
You're the richest man in the universe. You'd be Leopold Auchinleck.
That guy's, I got his wedding in my checking account.
Can I follow up on that? Because we adjust. Great, by the way, fantastic job by our entire show team and David Faber doing everything. We're throwing stuff up on the fly here. I'm not going to ask you to comment on this story in particular, guys, and jump in, talk. But would the implosion or partial implosion of a hedge fund of that size and magnitude be enough to rattle these markets like we saw yesterday?
So, I mean, I think of it as more as, is this enough of a washout, an event that might be the one that really resets the positioning, that resets the sentiment? We've seen an incredible unwind in momentum over the last 6 weeks. I do think we're getting to a point where that positioning starts to look a little bit more normalized. Valuations on the stocks, as for example, down to 19 times earnings in the last couple of days. I think.
Let me follow up on that. I don't want to put you guys on the spot, and you can go tell me to pound sand if you want. I'm not offended. I've been told worse. Between yesterday and today, nothing's changed. Kevin Warsh's statement and Kevin Warsh's criticism around him is the same as it was now as it was last night. But the markets didn't tank yesterday, but they were down. It was a bad day, right? Worst day for the Dow in a long time. Tech sold off. Today we're rallying. One of the best days of the year. Nothing has changed except for Microsoft's numbers. I don't think Microsoft's numbers are big as they are, big enough to do what's happening today. And I wonder how much this situational awareness story has moved the entire market in 48 hours. This is where I get told to pound sand.
I think it's a great point. It's tough to know what's going to happen given the fact that it was only 48 hours. And obviously, I was under the understanding with Warsh, I didn't think there was any chance that he was going to raise rates yesterday. I looked at a 4.25 CPI a month ago to 3.5 and got 35% of people thought he's going to raise rates. With the 75, it's a monumental drop. Now, I think 3-4 months from now, if we see inflation start to peak up, I think you could see that. I think there was some lack of confidence in him, and he did talk sideways. I don't know what he was saying. It was like he was very circular talking, Warsh. And I think that did put some concerns with the market. Today's rally, obviously, I think we had some people go in and say, listen, these things fell off a lot. I'm going to buy those. But they are still up a lot. A lot of these names are certainly there, and it's a concentration where I think diversification is going to benefit some folks to look at other places.
All right. Guys, stay right there. Let's bring in Mackenzie Segalis. We'll talk a little bit more about this. Apple reporting after the bell today. In the period of Tim Cook's tenure from August 2011, the shares are up more than 2,000%. They do tell earnings after the bell, and it will be his last call as CEO. Mackenzie joins us from Apple headquarters in Cupertino. As, again, it might seem obvious to some that they stayed out of the whole AI race, but a younger CEO or somebody with less, Mac, they might have just said, you know what, everyone else is doing this. I better go spend $500 billion too. And so far they haven't done that.
No, they've had the exact opposite bet. You've got Tim Cook's final quarter as CEO coming as the company now trades at 35 times forward earnings, which is a massive premium to the rest of mega cap tech. But it comes as investors reward this decision not to build an AI lab in-house. Baird saying that Wall Street is finally valuing the free cash flow that it once overlooked. Apple is still spending more on AI. R&D grew more than twice as fast as revenue last quarter. But its partner for a revamped Siri, Alphabet, is on track to spend $800 billion plus on models and on data centers, while Apple spends just $11 billion this fiscal year, licensing whichever model works best and keeping the iPhone and Siri as the front end. Now, that helps Apple maintain a cash pile that's upwards of $100 billion, which the company then returns almost all of to shareholders rather than pouring it into GPUs to chase the frontier labs. But there's a lot riding on the product side. A redesigned Siri, iPhone 18 Pro, and potentially a foldable phone all expected this fall. And after the bell, investors will also be listening to see if we hear from incoming CEO John Ternus, not just for strategy, but to take a measure of the man poised to lead the most valuable company in the world right now. Guys?
Well, I think that's a great point. Mac, thanks. We'll just turn to Jay and Michael here for some reaction. Jay, what are your thoughts? Apple, in a weird way, has kind of come through this whole period as maybe a barometer of the whole markets, again, not for the AI thing, but just as a reminder that there's a lot of companies making a lot of money who can be a little bit aside from that trade.
Absolutely, Kelly. And they have really been rewarded this year for being the more capital disciplined company that they are known to be. Obviously, a big couple of years coming up for Apple with a lot of new products. I think some of that has been priced in here recently with, as you see this premium valuation. I don't think the expectations for this quarter are actually that high, kind of on par with what we've seen in prior quarters. I think, obviously the iPhone and success in China are going to be key to delivering, a healthy set of results. But, for us, a lot of what Mackenzie pointed out is why it's so hard to be, way underweight Apple. They're great at sort of managing through cycles, continuing to produce steady earnings growth, and ultimately they have this incredible, customer lock-in and user base, which they can always, monetize.
And then, Jay, can I pivot to another company that I love that you just have bought? Because I've been talking for 2 years about Howmet Aerospace. They won't come on TV. Howmet, if you're out in Pittsburgh, we're here. We're nice. You should come on the show. They're very quiet. This stock has been a quiet killer. This is like the Apple of aerospace. Howmet. What do you like about them?
I mean, that's actually a great analogy.
You're welcome.
They really do dominate the aerospace, defense, and turbine markets. This is a company known for capital efficiency, incredibly resilient products. They're found in nearly 90% of aircraft around the world. And why we like it, not only is it a very well-run business, ultimately benefiting from two real secular drivers. It's the aircraft kind of refresh cycle. We're seeing huge travel demand. The record orders for Boeing and Airbus are supporting a massive cycle of equipment and parts, but also the turbine business. This is, Brian, as you well know, natural gas is becoming such a huge component of powering data centers, and these turbines are sold out for 7 years. There's 100 gigawatts of backlog, and Howmet makes the most advanced turbine blades, which go into those GE Vernova turbines. And so we think there's a real secular growth story here. Yes, it is on the more expensive side at around 50 times earnings, but that's a valuation we think has been earned by the competitive advantages and the secular story.
All right, gentlemen, it's been great to have you here. Thanks. Appreciate it. Michael Landsberg, Jay Peters of New Edge Wealth.